So I want to go over the very basic and simple breakdown of what credit cards are. Credit cards 101, right? This video is going to be for someone who, one, doesn't really know anything about credit cards, but two, how you can maximize your benefits if you already do have one. So, you might be thinking, should I even get one? What's kind of like the pros and cons? And, if you have one, I have some things, that can maximize your benefits that you might not even know of with having a credit card. All right, because credit cards is the number one way you can completely ruin your life in America, right? If you misuse credit cards, it can literally put you in a spiraling ditch that's going to take years to get out of. So let's not even get yourself in the ditch in the first place, so we don't have to worry about doing that. But I'm going to break this down today, and not your typical boring finance jargon type of language, but I want you to understand this at a complete beginner level to where you can understand everything I say in the easiest, but also the most detailed video I can do. So just starting off, why are credit cards even important? Like, do you really need one? And I'll just shoot it straight. Yes. Yes, you do. Right? They say America runs on Dunkin', but really, America runs on debt. I mean, just look at the debt bill of 37 trillion. So you can't really tell me otherwise. And it's definitely better to know how to navigate the game than to be completely clueless in the game that, you're kind of forced into playing in America. And truth be told, credit cards, it's basically like your entry level test in this financial game. You can look at it any way, but I always like video games, so I try to look at the world in the same lens, because it's not really that difficult once you understand you're playing this game in the first place. First time I ever started playing Call of Duty, I'm like, this is insane, right? But once you break it down, you realize the game's not that hard, it's not that complex, and you learn as you go, right? So this game, this test, in the financial game, like I said, it's entry level test. You mess it up, you won't be getting bigger loans out in the future for things that you want, cars, houses, whatever. But if you pass the test, well, it could open a ton of doors for you of opportunity in the future. So first, what exactly even is a credit card? At its core, it's permission from a bank to borrow their money at a certain amount, which is your limit. It's not the same as a debit card. With a debit card, every swipe pulls money directly from your own bank account. A credit card doesn't even touch your checking account right away. Instead you're borrowing from the bank and then later you pay it back. So imagine it like this, right? Imagine a friend lets you borrow their bike anytime you want, but the deal is you have to return it in good condition by the end of the month. If you do it, well, no problem, right? But if you don't, that friend is going to start charging you extra for every single day that you're late to return it. And that's basically how credit cards work. Borrow now, repay later, but just make sure you don't miss the deadline or it starts to get expensive and rack up. And now a debit card, basically like just bringing your own bike. Credit card is like borrowing someone else's. And if you take care of it, they're going to trust you again. And if you don't, that trust goes away pretty quick. So how are credit cards even keeping score? So every time you use a credit card, that purchase gets added to your balance. And at the end of each month, the bank is going to send you a statement. And that statement shows how much you spent, how much you need to pay, and when you need to pay it back. And it highlights two important numbers: the full balance and the minimum payment. So the minimum payment is the smallest amount you can send to keep your account in good standing. It might be 25, 35 bucks, whatever, sometimes more, but basically just have a little bit of number, and paying only the minimum keeps you from being marked late. But here's where the catch comes in. The rest of the balance, it doesn't go away. It's going to stick around. And then that's when the interest that you owed, it starts piling up on top of it. All right, so you can see how this spiral starts getting bad. So here's a big secret, a lot of beginners don't even realize. If you pay the full balance by the due date, you'll pay zero interest, none. And that's called using the grace period. So think of it like the bank saying, if you pay us back within 3 weeks, you basically just borrowed our money for free. Now, the people who win at credit cards are the ones who are usually always paying in full during that grace period time. So let's slow down, talk about the interest, because this is where most people fall into a trap. So the APR stands for annual percentage rate. And that's the percent that the bank is going to charge you over the course of a year if you carry a balance on it. So most cards sit somewhere between 20 to 30, 35%, some high, like that is a high percent. And it might just sound like a number until you actually see it play out. So if we're doing a simple example, say you spend $1,000 and you don't pay it off. So with a 20% APR, that debt grows about, you could say 50 cents every single day. So that's every day, weekends included. And now after 1 month, you've already added $15 to what you owe just for not paying it. Now after a year, that's going to be $200 extra. And you see how we can do it like that? So if you keep swiping while carrying that balance, the pile is just going to keep on growing and even faster. It's kind of like filling a bathtub with a faucet that's running while the drain is half clogged. Water keeps coming in, but not that much is leaving. Eventually, the tub overflows and, well, you're underwater. And that's exactly how credit card debt feels. So here's another thing most people don't even realize is that the interest compounds. You might have heard saying compound interest is the eighth wonder of the world. That basically means tomorrow's interest is based not just off that original amount that you owed, that $1,000, but it also adds on from yesterday's interest and it kind of snowballs. So that's why the small balance that you have, it means to pay it off later. It grows. It keeps growing and growing and growing. And so your credit card, it always comes with a limit, right? And the maximum amount the bank is willing to lend you is that limit. So if you're a beginner, maybe it's $500. I think mine, I had a secured one when I first opened mine. It was only $200. So if you got a decent job and some history, maybe you might get like a few thousand. I actually recently just opened Amazon one last week. Just ran my credit. They gave me a 20K limit straight off the bat, which I was surprised from it, But here's the most part, or here's the thing that most people don't really get, is that the limit doesn't just tell you how much you can spend, but this number actually affects your credit score. So there's this thing called the credit utilization. And it kind of, because your credit score breaks down into tiers, different factors that affect it. And so credit utilization is a big component of it. And that's basically the percentage of your available credit that you're actually using. So let's say that your limit is $1,000. If you spent 900 of it, that would be a 90% utilization. And to lenders, that looks risky, right? They don't like that. It's like seeing someone drive their car with, the gas tank needles kind of on empty, right? Or they're flying. They're like going 100 miles an hour. You see them in their car, like they might, it might work, but they're kind of pushing it, right? They might not get into an accident, but it looks bad. Okay. So that sweet spot that you want to stay under for utilization, they say is 30%, but I'll give you an advanced tip to keep your utilization between 2 and 9%. That is the hidden gem. Most people tell you, basics like 30%, 2 to 9%. So on a $1,000 card, try not, like at the absolute max, do not owe more than $300. But in order to get that full utilization, stay in between a $20 to $90 balance. So Of course, still it's better if you pay it down before the statement prints so that your utilization looks lower when it's reported. Because high utilization, it doesn't mean that you're a bad person or anything like that, but it just signals to the bank that you might be stretched a little too thin. And if they think that, your score can drop, even if you never even missed a payment. So before we even dive deeper, let's just lock in on some key terms that are going to show up everywhere when you're in this credit card world. So the minimum payment, right? Simple. That's the minimum payment you're going to have to pay back each month to keep the account active. Okay. So if you only pay that, that's how you get stuck in debt and the interest starts racking up for years. The grace period. Usually it's about 3 weeks after your statement date. You pay the full balance by then, and then you'll skip interest entirely. The penalty APR. This is like the bank's punishment. If you miss payments, they can raise your interest rate to even a higher level, sometimes greater than 30%. It's insane. Now, when I was saying earlier, a secured card, that's what I first started off with. And this was a starter card where you basically give the bank a deposit. So for me, I gave them my own $200, and then that became my credit limit. And it's basically just like training wheels for your credit. And then eventually you graduate from that and you can get a unsecured card, right? So then they sent me my $200 back, and then they gave me an unsecured card. And the standard the standard is an unsecured card. That's the standard, right? So there's no deposit, and the bank is completely just trusting you based off your credit worthiness. If you don't have credit, start off with a secured card. If you don't, because it's way easier to get approved for that. So just know these terms, and you kind of are ahead of most people, when it comes to swiping cards, because people don't even know like the basic rules when it comes to this. So you might have seen different commercials, different ads, all types of credit cards, right? So not every card is the same. So some are built for like everyday rewards. You got your cashback cards, which are the simplest. You can get from 1 to 5% on basic things that you're already spending, everyday stuff like groceries, gas, dining. Then you got reward or travel cards. So these, you might have heard like the points or the mile system, which you can redeem for flights or hotel stays, stuff like that. And then student cards, that's the one I first got, but it's basically just designed for us young people to start out. There's no annual fee, just a small limit. Secured cards, great for rebuilding credit. Also, if you tanked it in the past, you can kind of start over using this because it's using your deposit as the limit. There's balance transfer cards. Now, these let you move debt from one card to another, and often there's like a 0% interest rate for it for like a limited time, usually 12, I've seen 9 to 18 months, and it kind of gives you a breathing room to pay it down. So the trick is just pick the one that matches your lifestyle. If you travel often, a miles card might make sense. If you just want simplicity, cashback, perfect. And of course, if you're new or a student, young, rebuilding credit, stuff like that, secured card, just get your foot in the door. So there are fees that you need to watch out for because credit cards are full of them. There's a ton of hidden costs, and if you know them, you can kind of avoid them. So there's late fees. Usually it's like a set amount, $25, $35, if you miss a payment. And now there's annual fees, which some cards charge just for owning them. You might see like a American Express, they have like an annual fee of $500,000, right? If you're spending big money like that, it balances out and it's actually worth it. But honestly, we're just skipping it down to beginner level. Like if you're a beginner getting like your first 1, 2, 3rd credit card, honestly, I would just skip all those. Just the rewards isn't gonna outweigh the cost of it. Now, there's also foreign transaction fees. When you buy things in another currency, there's a fee to put it in their currency. and it's usually about 3% of every purchase, which you got to watch out for, right? If you're going to travel, I mean, I went to Canada not too long ago, and I had to make sure that I used my Discover card, and they didn't have that fee, versus I have 2 other cards and they had those fees. So you want to definitely make sure, especially if you're going somewhere, like Canada, or even if you're going to Europe. So you want to watch out for that. Then the balance transfer fees, which show up if you move debt onto a new card. It's just like that one-time fee, and you get in that range of 0% interest for a little bit. But you want to watch out for it. Not all of them do it, but watch out for it. And then watch out for the cash advance fees, which this slams you if you try to withdraw cash from your card, which honestly you should probably never even do anyways. So each fee is kind of like a trap on the sidewalk. Once you know where they are, it's easy to step around it. So here's the big 5 no-nos. Big 5 things never should do with your credit card. Number 1, don't skip a payment. Even one missed payment, it's going to tank your credit score. You're going to add fees on top of it, and you might even trigger that penalty APR to be on it. So don't spend the money you don't got. Number 2, don't max out the limit on your card, because that high utilization, it makes you look risky. Banks don't like it. And if you can't pay it off, well, that interest is going to crush you. Number 3, don't take a cash advance. Too many fees with it. The interest starts immediately. The rates are even higher, on top of the extra fees that they put on there. Number 4, should go without saying, but I'm going to say it. Don't lend your card out to anyone. It doesn't matter who uses it. The responsibility kind of falls back on you. So it's a key takeaway. I know some people that let their girl use it and, go crazy. So don't do it. And number 5, watch out for your rewards. Don't waste them, because you're going to rack up some points when you use it for so often. These points, when you use these points to pay down balances or for cheap gift cards, they give you the worst value out of it. So you want to look and save for things where you can get more bang for your points. I know with my Wells Fargo card, it has 2% back on literally everything. That's why I like it. It's simple, 2%, whatever. When I go to redeem it to pay off like my balance, it's kind of dollar for dollar. But there's a quarterly or monthly specials of getting gift cards. These gift cards are like on sale. So like I go to Chipotle a lot. Sometimes they have 10, even 20% off Chipotle gift cards. So if I buy a $50 Chipotle gift card, it's going to be $45 or $40 at actual price. Right? So stuff like that you want to keep out for or look out for. So let's just connect your credit card to the bigger financial picture, which is your credit score. And this is the number that lenders are going to check to decide if they trust you. It decides everything from whether you get approved for an apartment to what interest rate on like a car, house, like all that stuff. It all matters. So your payment history, that is the biggest factor, right? If you pay on time, you'll build trust. If you don't, your score is going to drop fast. Credit utilization, second biggest one. The lower your balance is compared to your limit is the better. Now, length of credit history, this matters. The longer you've had accounts open, the stronger your profile is going to look. If you're just starting out, you really don't need any big loans. Honestly, it's fine, because you're going to see a red thing because your length is so low. Honestly, once you get past like 3, 4, 5 years, you'll be all right. And it's not too big of a factor in it. So just make sure you're doing, paying it off and keeping a low utilization for those couple years while you first get it open. And then they look at a credit mix. It's going to give you points for having different types of credit versus it's a credit card, it's a loan, mortgages, literally anything. You want to mix it up, right? This affects your score, okay? And then new credit matters because applying for a bunch of cards at once, it kind of makes you look desperate, which is why, when you get a hard inquiry, when you either get a loan for a car or trying to open up a new credit card, those hard inquiries, you don't want to get too many of them. You really want to stay under like 4 to 6 within a 2-year window, because anything more kind of looks suspicious and desperate is how they look at it, right? Not the biggest impact on your credit, but it still matters, So using a credit card wisely is one of the easiest ways to just grow your score over span of time, right? Treat it right, it'll open doors for you. Treat it wrong, closes them. So most people think about credit cards as just spending and paying back, but the benefits, they go way deeper than that. First off, credit cards are safer than carrying cash. You lose cash, gone forever. You lose a card, you can call the bank, they'll cancel it and send you a new one for free. I've never had them send me a fee or whatever for sending it to me. Plus, on top of that, using a credit card, you might think, okay, I could probably use a debit card. Same thing. Well, with a credit card, they give you like a really good fraud protection. So if someone steals your number or you lose your card, they take it and they spend $500, you're not going to be the one responsible for that, right? With a debit card, the same theft could drain your checking account, and that'll take weeks to fix, right? So initially you lose your money and then they try to replace your money, versus you use a credit card and someone steals that $500. That's the credit card company's money that they just stole. So they're going to be way quicker to do it. And 2, you don't have to worry about your account being low because it was fraud. And also credit cards, they honestly just make budgeting easier. Your monthly statement shows exactly what you bought, when, and where. And many of the apps even categorize your spending automatically, which it helps to see where your money's going. And then there's even some hidden perks. Like, a lot of people don't even look at the bottom of the fine print to see that some of your cards actually extend warranties on stuff that you buy. So like electronics, they can double the coverage. Some protect your purchases from like theft or damage, for the first 90 days. So if you bought like a new computer, something happens to it at day 60, right? Best Buy isn't going to accept it back because that's over their 14-day window, versus on your credit card, you have a little bit longer on top of that. So, others, they let you return items for a refund, but like, even if Best Buy doesn't accept that computer back, they'll still refund you the amount you spent. And then travel cards, this comes with all kinds of stuff. Like, you can get rental car insurance for free. You get like lost luggage coverage. There's even accident insurance that comes with it. And, you're not going to get these things with cash, but even with most debit cards, you don't get these benefits. So rewards is kind of like the fun side of credit cards. Cashback, it's simple. Spend $100, you can get $1 to $5 back, just depending on what you spend it on. Me, I spend $100, I get $2 back every single time. And obviously it doesn't sound huge, but if you're spending money throughout the course of time, spend $1,000, say every month, that's going to add up. You might get $50 back or even 100 back over a year, right? And it's literally free money. Like, why would you not take it? Now, points and miles, if you're one of them travelers like that, I'm not, but it's pretty powerful when you use it right. So a smart redemption could turn 50,000 points literally into free plane tickets, and those points are worth over $500. So that's literally 10 times the value of just using those same points to buy the same like $50 gift card. So, the trick is patience. Obviously, once you rack up $20 there, you don't want to just spend it every time. Just keep it there, save your rewards so you can get like something high value. And travel is usually the best choice, but anything, like I was saying with the Chipotle gift cards, those are pretty sweet too. So there's some risk with this that, you don't want to ignore, because credit cards are powerful, but they do come with real risk. The biggest one is overspending. Okay. It is easy to swipe without thinking because you don't see the cash actually physically leaving your wallet, right? You might think, you still have that same amount in your checking account, but it's kind of like the whole psychology with it, right? Another risk is if you fall into long-term debt. You can do this, simply just by only paying the minimum off, which you don't realize the interest that actually accumulates over that time. It can seem like it's an easy $50 payment today, but it actually turns into thousands literally over the years that you're going to have to owe. And now missed payments, adding on top of the risk, they don't just cost money, they drag your credit score down for years. Once that score's down, everything starts to get expensive. You get higher percentage on loans, apartments, even insurance rates go up more. And they say some jobs check it. I don't really know, but even then, that still counts as a risk. So the point is, I'm not trying to scare you or anything, but just to show you why responsibility really matters. So like the card itself isn't dangerous, it's how you use it. But you can see everyday spending that people do. They spend too much than they really have, which is why consumer debt is at an all-time high. So how do we use this card smartly? 1, always pay it on time. 2, pay it in full whenever possible. 3, keep that utilization low. And 4, don't open too many cards too fast, right? Just make sure you're monitoring the statements, make sure you know what's coming in, what's coming out. And it's really as simple as that, okay? Because a lot of people don't talk about the psychology of the spending because credit cards mess with your brain, right? When you hand over cash, you can pretty much feel that loss of the cash leaving, versus when you swipe a card, your brain's not going to register it the same way. Even if it's a debit card, you can kind of pull up your banking account and see, yeah, that money just left, right? But with a credit card, it can feel painless. And that's why the studies show that people spend more when using their credit cards compared to cash or debit cards. So like restaurants, for example, they see higher bills from customers who pay with cards. Why is that? Because these people, they don't feel like the money's actually leaving their wallet, which is why credit cards are very powerful, but very risky. So if you're not self-aware, you're gonna overspend. And now let me just clear up the difference real quick between credit and debit, because people mix these up all the time, and I want you to understand this entirely. Your debit card pulls money directly from your checking account. If you don't have the money, transaction simply just won't go through, right? Unless you got one of those like overdraft protections. I think I remember seeing that, but in which case, the bank's going to charge you a fee, but you really can't go too much over, like what, 50, $100 at most. But the credit card, on the other hand, it's just borrowed money. Swipe now, pay later. And if you play it right, that later comes with no interest. But with debit cards, you can't build your credit history with it. Credit cards, you can. Debit cards have weaker fraud protections versus the credit cards, having strong zero liability protection sometimes. And debit cards, they don't offer you any rewards when you spend, and credit cards do. Which, that's why most financial experts actually recommend you using credit cards. And it builds responsibility, especially when you're just doing everyday spending and just paying them off in full. You'll get the security, the rewards, and the credit building benefits all in one, which is great. And now this all sounds pretty good, right? So you're probably thinking like, why would the banks even offer all these free points, right? Like, this is crazy. If I just spend money I was going to spend anyways, you're going to give me an extra $100 at the end of the year just for spending what I was going to spend anyways. Like, if these rewards are so good, why do banks even offer them? And really, it's quite simple. Most people do not use their credit card responsibly. The responsibility that people have on using their credit card is so low, and these banks literally make billions from interest and fees alone. And, It's crazy because the average American carries thousands in credit card debt alone. And so all that debt is earning banks 20%, 30%, just straight off of interest. Now you add in late fees, cash advance fees, annual fees, whatever. You can see why these banks are happy to hand this out, right? Obviously, if it was a dying business, they wouldn't do it, but they make a ton of money from it. All you got to do, the simple hack, simple. If you're disciplined, you pay it on time, in full, avoid any of the tracks they give you, and you kind of just flip the script. You put it in your favor. You'll get all the rewards, the perks, and the bank, doesn't get any interest from you. That's literally how you win a credit card game. Now, let's get a little advanced with these, okay? So once you mastered the basics, here's a few, advanced tips I got for you. Okay, so one strategy, I'm talking, step above very basic beginner level. The first strategy is paying off, or not paying it off, but paying multiple amounts to your credit card in a month. This is going to keep your utilization low, and it makes your reports look better. Okay, so another is to line up your due date with your payday, or at least if you have two different credit cards, put the due date on the same days. Or you can split it up if you want. I like putting it all on the same, so I know the 7th, everything's due. Make sure I have the money. It gives me a week from the 1st of the month, so I know everything else is paid for. I got that money that's due for the credit card. It's funny because like the statement date's the same, but you can choose your due date. Obviously, don't try taking advantage of it. All right, I want to pay the 18th this month. Now I want to pay the 22nd. Now I want to pay the 26th. Like, just keep it on one date. Whatever is going to benefit you. However you get paid, twice a month, bi-weekly, once a week, like whatever, right? But you can choose this and you can line it up strategically for yourself. Now, some people even ask for credit limit increases, just so you can pay lower into the utilization, right? Even if, you don't plan on spending more, asking for that credit limit, you can get better utilization. So when I had my Discover card, they started me off at like 2,000, and like every couple months you can send something in the app. Check whatever credit card. I might even make a credit card list video, but for now, just go to a credit card that you have. I want you to look for a section within like the settings or whatever. You could literally ask for a credit increase within the app, right? If it's not too much, right? If you want like an extra 2K, honestly, they instantly approve me. Now, if you want higher limits, you'll probably have to call and kind of give the same spiel, but it doesn't hurt you if you ask and they decline you. I just wouldn't do it every month because you're gonna waste your time. Because they're gonna be like, no, I just declined you last month. Why are you asking this month? Like, okay, they declined me this month. I might wait 3-6 months. Call, ask again. It's way better because now that Discover's at 10,000 limit. So when I spend, now I have like a $1,000 limit because I'm telling you, keep it under 10%. 2 to 9% is your sweet spot. You don't want to be under 2% because then it's going to look like you don't even use the credit. So you want to carry a small balance when you're doing it. So another advanced tip you can do is stack your rewards. So for example, if you have a cashback card for groceries, you can get a travel card for flights if you do that a lot. And then you can have a gas card for fuel. This way you maximize rewards in every category without overspending. Okay, so I have one card, my Discover, which I strictly use for gas because I get 2% on gas. This is my first card. Obviously, I guess I'll add this in a tip. Do not close your old credit cards because that credit history length is very important. So when you keep that history, as long as you're not paying the annual fee, you'll be fine. Just keep it, try to use it. That's how my Discover is. I get 1% everywhere except 2% on gas. Now, a couple years later, when I opened my Wells Fargo account, this is literally 2% on everything. So when I'm buying groceries, when I'm going out, restaurant, whatever, I'm using the Wells Fargo. but I know I need to use my Discover one because that has my longest credit history, which is very important. So I keep that one, just gas. And I have my Wells Fargo one, kind of anything else. But I realized I spend a lot on Amazon. So I opened an Amazon account. That's the one with the 20K limit. The Amazon one, I get 5% back on everything I spend at Amazon. And I do spend a lot. So it's like, it's well worth it, you know? And, you know, there is balance transfers. So if you are starting with debt, you know, you can move it to a card, which gives you a 0% APR, which is just like a breathing room to pay it down. Like, obviously, you don't want to take advantage. You don't want to overdo it and take advantage of it, I guess, because you never know when hard times might come. Like, I don't know. I don't want to open up every single credit card just to swap balances now when I'm in a decent financial situation. Versus something bad could go happen. I rack up the credit card debt. I might need that breather. So always keep that in mind. Always think long term. So many people think short term with this. You have to think about the long game. Don't think about tomorrow. Like, think about next year. Like, that's how so many people get stuck in this cycle. You know, they're not even barely even thinking about tomorrow. They think about today. Think about today and not tomorrow. And once you start thinking about tomorrow, well, then that's short term thinking. And then you start thinking about months, years out. Okay, long term. That's what you want to do. Don't burn bridges, stuff like that. So real quick, I just want to go over the future of credit cards. Why not just break it down a little bit? I thought this was kind of cool. So credit cards, you know, they're changing quick, right? You have these digital wallets like on your phone now for Apple Pay, Google Pay, and it's making swipes almost invisible because I literally tap to pay for 70% of my stuff. Now you got to watch out for these buy now, pay later services. I know you see the Affirms and there's one other big one, but those big buy now, pay later services are actually competing with cards, you know, because they can offer installment payments. And now some of these cards are actually going like fully virtual. Like you're not even getting a physical card at all. It's just kind of crazy. So future, I mean, I've seen that the rewards are evolving. Like I've seen cards now where you can literally redeem the points for crypto. I've seen you can get like Bitcoin or Ethereum cash back. You can get stocks cash back, or, you know, they even put like direct cash into your investment account, you know? So it's definitely cool when you check out all the rewards and stuff like that. Even other partners they work with streaming services or like delivery apps like DoorDash and whatnot. And you can get like built-in discounts. So, I mean, bottom line is that credit cards, they're not going away anytime soon. If anything, it's just getting more integrated in our daily life. You know, learning how to use them is what's going to set you up to thrive in whatever new versions are going to come out. So just zoom out all the way. Credit cards, it's not just a tool for spending, but it's the foundation of your financial trust in this financial game. Okay. This is your ticket in. Do not fail the easy section of the test. It decides everything from whether you get high or low interest rates on loans. You know, it decides how easy you can rent a car or buy a car, rent an apartment, even start a business. Okay. So use it recklessly. It's going to trap you. Use wisely, it will be a great stepping stone for you. So just summing it all up, I tried to give you the most amount of information that, you know, a beginner can understand. So sure, if you don't have a credit card right now, you know, if you're at that level, you might have to re-listen, you know, clear some things up, get a better insight of, you know, all the info you might have missed. But for the most part, I just tried making it as straightforward as possible, going over bunch of stuff. I know this video is a bit long, but, you know, of course, credit cards are powerful. They're safety nets, reputation builders, reward machines, you know, but it's only if you use it with discipline. Don't skip payments. Don't max out your card. Don't take cash advances. You know, don't waste rewards, stuff like that, you know. Make sure you're always paying it on time, paying it full. Keep the utilization % low. Keep track of your statements. everything like that. Just make your credit card match your lifestyle. Whatever you were paying, last month on a debit card or in cash, spend that same amount on your credit card. You can get the benefits of it. You can be the person who uses credit cards as tools, and this will unlock bigger financial wins for you. You get cheaper loans, better opportunities, even free travel, right? So credit cards can either weigh you down or lift you up. And that choice is completely on you. Take responsibility for it. It's completely on you. But other than that, that is all I got. I am out.